Hello everyone, today is Sunday, the 23rd of November, 2025. I'm Jason Shapiro. Today I wanted to talk a little bit about the Japanese yen carry trade. There's been a lot of talk in the last week or two from people talking about how this is going to be what's going to blow up the world financial markets. This is the latest in the things that the bear pointers are pointing to. And just a real quick summary, the Japanese carry trade is based on the idea that interest rates in Japan have been basically zero for a very long time. So what you do is you borrow money in yen at a basically zero interest rate, you flip it into US dollars, and you buy something in US dollars, be it treasury bonds or stocks or anything that can give you a positive return. And after a time period, you sell that for a profit, you flip it back to yen, you pay back your yen, and you made essentially what is a risk-free profit, so to speak. That's the yen carry trade. That's part one. And of course, part two is Japanese investors who have not been able to earn any yield on their government bonds by government bonds of, say, the U.S. or stocks in the U.S. where they can earn something. And now that the yield in the Japanese government bonds is going up and Japan is raising rates, all of these things become less attractive, right? Japanese investors can now bring their money home. And of course, they're going to bring their money home means they have to sell U.S. bonds, they have to sell U.S. stocks to bring their money home, to invest in their own government bonds. And the people that are doing the yen carry trade are going to get screwed because the interest rate is no longer zero, so it's not worth doing anymore. So that is not going to be able to be done anymore. And that's going to reduce a whole bunch of liquidity in the world to buy that has been buying all these other assets. That's the general idea. And I don't doubt that any of that is happening. Although I got to say, I've worked at hedge funds and I know a lot of people that work at hedge funds. And while I'm sure people are doing that yen carry trade thing, I don't know a single person that's doing it or that ever has done it. So not that I know everybody, and I probably don't know the important people that are making these big trades, but I would have thought somewhere along the way it would have trickled down. I would have heard of someone doing it, but I haven't. The second thing I would say about it is the whole idea, at least to me, is stupid, because if you're borrowing yen now, turning it into US dollars, and let's say you wanted to hedge it and didn't take the currency risk, you would sell those yen forward, and the cost that it would cost you to sell those yen forward would exactly make up for the extra interest rate that you're getting in the US bonds, right? That's how the math works of forward currency trading. So you have to do it naked. You have to do it unhedged. So basically, you're betting that the yen's not going to go up. So why would you even bother doing any of these other things? Why would you bother buying U.S. bonds? Why would you bother buying U.S. stocks? Just short the yen. That's the bet you have on anyway. So just be short yen. Why do you have to borrow this and switch to that and buy it? Just short yen. That's your bet. So what's the point of doing it any other way? It doesn't. Again, I could be wrong. I could be stupid, but that doesn't make any sense to me. The whole bet is short yen anyway. So just short yen. Make it simple to me. That's one. Two, is anybody really dumb enough to understand if they put that trade on that's not where their risk is? So like, are people really that stupid and irresponsible? Irresponsible? Maybe. You can make the argument that, hey, these hedge funds, it's OPM. What do they care? They might as well just do it. And if it blows up, it blows up. All right, you can make that argument, but I don't know. I give people a little bit more credit maybe than they deserve. I'm just not a big buyer into it, I guess is my point. It all seems silly to me. Not that it can't happen. Listen, my main issue is the more things are observed, the less chance that they have of being a shock, right? Because if they're observed, then people are getting ready for it. So therefore, how could it be a shock? Not always true. In 06, 07, 08, as we know, people were observing the fact that the housing market was a huge bubble that was going to pop and cause a lot of problems. And while it took a little longer than they expected, it did eventually happen. The bubble did pop, and it did cause a pretty big problem, right? So it can happen, all right? But to me, it has less of a chance of happening the more it's observed. And the reason it's being so observed, if we look at this chart, of course, this is the positioning chart, which is my whole thing, was last summer we had a big move up in yen. This is when the Bank of Japan first started to talk about the fact that they were going to start raising rates, right? So this big move up in yen. And corresponding with that ended up being a decent move down in the stock market, which was here. It didn't last as long as the yen thing did, but the market went down at first. Had a pretty decent move down. And of course, everyone, though the bear porn people were calling crash coming then too. But so it did correlate, right? But what's the difference, folks? Look at the positioning in the yen here. Look how short people were yen here, right? And so, yes, it can have a big move the other way. Look where they are now. They're actually net long. And funny enough, look how short they were here when the yen bottomed. And look how long they were here when the yen topped. We've come off of that here. But we're not in a position like this now. Is position everything? No. But it helps, especially when you're looking for a big move like that. So nobody was thinking about this at this point, obviously, because they wouldn't have been so short yen if they were. Whereas now a lot of people are thinking about it. So I don't know that it could have the effect, or that the odds are it's going to have the effect that it had that last time, right? First of all. And second of all, the idea of, oh, it's going to suck up liquidity because people are no longer doing this. I mean, it does create money and liquidity. If people borrow a bunch of yen and switch it into dollars and buy stuff with it, that's a loan. And a loan is just lending money. It's just another way, just like printing money or giving away money or whatever, of creating more liquidity. It does reduce liquidity, sure, if they stop doing that. But what's so great about the yen? You know, so the Swiss franc interest rates are 0 right now. So why not just do it in Swiss francs? Borrow Swiss francs and do your whole thing, right? Borrow Swiss francs, switch it into dollars, buy U.S. assets or whatever, and you know, do the whole thing in Swiss francs. What's the difference? And of course, or just get short Swiss franc, which is essentially the bet that you're making anyway, right? And here's a Swiss franc, you know, and people are kind of getting short a little bit of Swiss franc here. But anyway, so what's the difference between yen and Swiss franc? Again, I don't know. Tell me what I'm missing here. You know, I'm a simple-minded person, right? I'm trying to break it down very simply, because I hear so many doomers talking about this. So I'm trying to pick holes in the argument to see where it could be wrong. You know, anytime something is coming out at me all the time, all day, I'm reading these things all day, I'm trying to figure out what the hole is in the argument. And this is what I think are the holes in those arguments. So if you see something that I'm saying is wrong or whatever, I'm always happy to hear it. Please put it in the comments. Say, Shapiro, you're wrong. I run $1 trillion hedge fund and I'm borrowing yen. I've been doing the yen carry trade for 10 years. You have no idea what you're talking about. Okay, good. Thank you for letting me know, because I don't know. And the last thing I would say about this whole yen thing, you know, I talk a lot about positioning. Okay, most people know that. The other thing I talk a lot about is market confirmation. And I'm looking, okay, so the S&P has been coming down. We know that. The stock market has been coming down the last few weeks, right? But it certainly ain't because the yen is going up, right? The whole yen carry trade is, oh, the yen's going to go up because people are going to repatriate their money, take their money out of stocks, which is going to cause stocks to go down, and they're going to put it into yen because they're going to repatriate their money back to yen, or they got to get out of their carry trade. Well, the yen hasn't been going up. The yen has been going down. It has accelerated its down move while the stock market is going down. So that theory, to me, is not holding. And in fact, the one day where the yen actually was good, which was Friday, was the first day that we really saw a decent move back up in the stock market. So I'm not following, I guess is my point. You know, I'm not following how the yen is what's causing this, yet the yen is not doing what it's supposed to do if it were causing that. You know, JGB yields have been going up. The Japanese interest rates have been going up, but the yen is going down. So that also, to this point, does not reconcile to me. Anyway, that's my thought on the yen carry trade. I hope that thought process maybe helps you think about it in a different way. Right or wrong, at least it's different. It's always good to hear a different argument while you're building your theories, okay? And I hope everyone's doing it right out there. And we'll talk again soon. Thank you very much. Hi, I just wanted to say, if you like these videos, we do them 4 days a week, Monday through Thursday, for people, and it costs, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right. And we hope to see you there. Thanks.